Welcome back to Trading 360. I'm Nicole Penelides, live at the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist, bullseyeoption.com. We have a lot to talk about today. Before I get to your trades, I just wanted to, we just got in the jobless claims. We're waiting on the jobs report tomorrow. What are your thoughts as we're seeing some down arrows here today? Alan.
Well, every week, and it seems there's always a naysayer on before my optimism. Now, I have to point out that your previous analyst had some great numbers, and he may be correct with those numbers, but we're not in the business of predicting the exact numbers of unemployment or predicting when or if a recession is. We're in the business of how the market's going to move. That's how you make money here. And the S&P is still holding 4,000 very significantly. We had a breakout in the NDX above 13,000. Now we pulled back kind of that breakout point, but the markets are strong. And you mentioned the banking issue. We're way past that. The market's rallied 5% in a month. That's done.
All right. So I think that's a good point that you're making because, we are watching 4,000 and Rick does a great job with the charts. He's been watching these levels and these ranges. Let's get to a name like Pfizer, which hit a recent low of $39. You talked about how much it's off. It's really off about 20%, almost 20% this year. What are you watching right now, Alan?
Well, this comes back to some of my friends that are not really traders, but they trade, right? So they're always texting me with what the Dow is doing. The Dow doesn't matter. The Dow doesn't mean anything. It's 30 stocks. It's weighted. It's weighted by price, not market capitalization. It is not the barometer of the markets. It's not. We're not in the 1900s anymore. So the S&P, like I said, has been trading in a range between 3,800 and 4,200. A breakout of that range targets 4,600, which is 10, 15% above. So we'll have to wait and see. But the Dow has also been stuck in a range. If you remember, the Dow was a leader before. The Dow is between 32,000 mainly and 34,000. So breakout of that range charges 36,000. And while the S&P is up 6% so far this year, the Dow is unchanged. So there's some catch up to do. So now a Dow stock, a bad Dow stock, bad enough to buy, Pfizer's down 20% in 2023 alone. It's been between 40 and 60 now for 2 years. 50 is the midpoint magnet for that. And it's been between 40 and 45 here, making a bottom base where we have bullish divergence. That's the theme for today. New lows, not new highs, implied volatility. That's a sign the sellers are running out of strength. That breakout of that range targets 50 as well. And the PE is 6 on this stock.
Right, understood. Okay, so that's the point. Rick, what do you think when you take a look at this chart?
Quite a slide in this name since about December. We're down more than 24% from this point right here. Then we hit our yearly lows. We're up about 6% from that point now. So we are getting a bit of relief. It's looking more like an upward channel here, as you can see between these two white dashed lines there. And we can see as well that the downtrend was broken. We are starting to trend upward here. We broke above our yellow 21-day exponential moving average, which has also shifted from a downward slope to an upward slope, which could be an early sign of potential trend change from down to up. Alan mentioned some bullish divergence. I saw the same thing in the RSI as well. We hit a low in the RSI, and then we were trending upward as price continued to make lows here. So that's a good sign for bulls. That's a sign that perhaps some momentum is building up in the name. And also, yesterday, we passed above that 50 midline in the RSI. So that's the other thing to note here, the shift from bearish momentum to bullish momentum here. So it seems like the wind is behind the sails of the bulls here in this name. However, not everything is looking perfect yet. We broke above the upper line of this upward channel yesterday, but we retreated back down significantly to within the boundaries of the channel. Looks like the same thing is starting to happen today as well. We opened above it. We're slipping back down to retest that border there. In terms of support and resistance, well, to the downside, we've got our yellow 21-day exponential moving average right there. That comes in just below 41. In the short term, that could be a support point to watch. In the longer term for support, those yearly lows near 39, that green dashed line, are a point to keep an eye on as well. To the upside, we've got the boundary of our channel. Then we've got our 63-day EMA, which comes in above, right around the 42.70 level or so. So if we do break through to that side, 44, this red dashed line, that's a point where it looked like price had some trouble getting above. And it's also the bottom edge of our value area, with the point where 70% of the trading has taken place according to volume profile. That could be another point to watch for some stall and trend if we do keep moving to the upside.
Right. Which part did you hear, Alan? The wind in the sails part? What did you think?
Well, I don't even have to have that discussion because we didn't talk about how to play it, because how to play it is actually more important than picking the stock. Obviously, it's a well-known stock that's had a pullback. And if it breaks above 45, we both agree that then that could give it some legs. So the way to play it is more important. I'm looking at September 37.5 call. Again, the low of this is 40. So we're looking to buy below the low. That option is trading for about 5.25 or so. It's $4 in the money, and it's a September option. A September 37.5 call has 6 months of time for this stock to make a move and push above that 45 level and target 50. Now, if it gets to 50, which is that midpoint magnet and which is a technical target from this range from 40 to 45, this option goes from 5.25 to 12.5. I'm not good with numbers, but that's more than 100% gain that you're in position for, and you have the right to be long from a low level below those lows.
Right. Let's move on. We'll go to Weibo. Thank you for that. All about Pfizer. And when we take a look at this one, we see it today at around 18 bucks. What are you thinking? Well off the lows of October of $10. Where are you thinking this one's heading, Alan?
Well, this is against pullback. I kind of did this for my friend Ben, but we'll move forward here on this. Now, this is a stock that bottom based, and we talked about this. It had bullish divergence in October, and it rallied to 25. Okay, now it's giving it a second chance on this play. Now, we've been largely between 10 and 25 for a year. The midpoint 17.5. We're bumped above that now here after this pullback, and the 17.5 is also the 200-day moving average. So the way to play here is buying the $15 call for July. It's trading about 4. It's 3.25 in the money. So the expiration break even is 75 cents away with 3 months of time. And again, if we just get to the top of this range, this 25 level, that option gains more than 100%.
Okay. What do you think here, Rick Ducat, when you take a look? He's buying a call, bullish.
Well, this is an interesting chart here because we are up more than 80%, 81% or so from those yearly lows, but we're still down about 31% from the yearly highs here. We didn't make much progress beyond these old highs during our most recent leg up around the 24.66 mark. We did peak above them into new closing highs above there, but we saw a very sharp downward move after that point here that stabilized around 15.75. Now that also gives us a trend line to go from these lows near 10 and touching on those lows from 15.75 or so. So that's a point to watch going forward here. In terms of moving averages, we are slipping below all three of them. We stopped right around our 252-day moving average there in purple, around the 21.55 mark when we saw this large red candle here that seemed to be a bit of a rejection above the old highs that we saw here and here around 21.25. So since then, as I said, we've slipped through all three of the two shorter-term moving averages that we follow, our yellow 21-day, our orange 63-day. We also broke below volume profile near 20, our volume profile point of control near 20, which is the area of heaviest trading, and that can also be a point of support or resistance here. Looking at the RSI, fallen below the 50 line here, so momentum is back in the hands of the bears. Overall, kind of looking a little bit more bearish in this name right now, but we are closing in on some support points here. We've got our value area right near 1745. We've got our trend line just below that. So look for some potential resistance to the upside around these points I mentioned. Volume profile point of control, 2125, that red dashed line right there, and then our 252-day EMA right around that same level.
Yeah, I like that you're looking at those moving averages too, and the big moves that we've seen, Alan. You okay with those?
Yeah. Got limited risk. Again, this option is $3 and some in the money, and it costs $4. So, it's like being long from 15 essentially because the time value component is so small. And we're both looking at the same thing. We're looking at this 17.5 level as a pivot. I'm looking at this as as a level to kind of lean on a weekly basis and see if we can get another leg higher. Let's remember, China is 40% off its October lows. And, the S&P is only, 15, 17%. But I want to say, let's remember that the S&P is more off of those lows than it is off the highs. We're only about 15% off the all-time forever highs.
Okay. All right, good point. And then when we take a look now at Zim Integrated, its shipping and services hasn't been doing too much of late. What are you thinking here? It's just sort of trended lower since last May.
Right. Now, this is a stock. There's a couple of lessons here with this stock. Now, this stock isn't as highly traded or well known, so it may not be as liquid. So when you're trading a stock like this, you've got to put in price orders. You can always, with an options trade, get your theoretical value. That's going to be what it's worth. And you want to put in a limit price for what you're willing to pay because the spreads might not be as tight as other markets. Now, this is a stock that showed up on my radar because it's had a lot of unusual option activity, and it showed up by bullish divergence, meaning May new lows. That's telling us that the sellers are getting tired. At some point, there's going to be some profit taking, and that's going to hit some buy stops and feed itself. Also, you're seeing, like I said, these option activity, which has been leveraged buying here at this bottom. So it's 75% off its 2022 top. I don't know anything about this stock. I'm trading what I see, and I see a lot of positives. It's been between 15 and 25 for 4 months. So I'm looking at the July $15 call. Again, that's down near their low. It's trading about $3.75 is its theoretical value. Now, that is about $2.50 in the money, 3 months at a time. And again, if it gets to 25, this option will gain more than 100%. So it's a position for success with some time based upon the technicals that we see that it looks like we're going to get a bottom bounce in a stock pop.
Wow. All right. I mean, you're talking some big moves. Rick, what do you think here?
This one's been beaten up pretty badly since those yearly highs, but some of the areas that Alan mentioned I thought also made sense here. You can see that we're down, significantly, 75% or so from those highs. I wanted to zoom in more closely, though, on the recent price action here, just so we could see it a little bit better. And we can see here now that we have mostly been in a range between about 1650 to the downside, this green dashed line right here, and roughly 25, which is right about here or so. So we can see that in the shorter term, our moving averages are starting to trend downward. Our yellow 21-day, our orange 63-day. We had quite a gap down a couple days ago that took us below both of those moving averages. It was looking like they were providing a little bit of support in the short term here, but the 1950 level is what stuck out to me as well, because that's where we bottomed out here during the most recent downswing. Now we're finding ourselves with bearish momentum according to the RSI. We're just above that oversold area. That would be another bearish signal if we were to slip into that point. But I'm also seeing kind of what Alan said here in terms of people seem to be willing to make a play at this level based on the volume node that we're seeing here, a sizable volume node that suggests there's some conviction at this level. We also didn't really make too much progress below 1650 or so. We did bottom out at 1623, but we, you can see right here, we saw some support right around that 1650 level, so we didn't make it too far below that point. So it could be due for perhaps a bit of upward movement here. In terms of support and resistance, like I said, 1650 to the downside, 1950 to the upside is our blue dashed line. If we do make our way above that, we've got our confluence of our two moving averages right there for some further resistance right around 2175.
Right, understood. I think that's a good point there. When you see the RSI going down, everything's dropping, and you feel a little bit, disheartened, and then you see the volume, Alan. I think Rick makes a great point. People step in when this pulls back, so they don't beat it up lower. In fact, they start to show interest. Final thoughts on that one?
He's looking for divergence there. I look for divergence in implied volatility because that shows the emotion of the stock. And if the stock makes new lows, but the emotion doesn't increase, then that's telling us that that may be the end of the downturn. So I'm looking for a sentiment shift as well. Now, what I like about this chart is the 20 level. 20 is the midpoint of this range we've been in for the last 4 months, roughly. And if we fill in this gap and get to 20 and pop above it, then that's very much a positive. So I want to go in the Wayback Machine. If you go back a couple of months, what's a stock? I can talk about Intel. It's a stock that had this bullish divergence. It's had its sideways channel. It had finally had a breakout. Nobody loved it. Everybody hated it. The fundamentals are well, how shall I say, less than poor. But the stock broke out, and those options gained, 50% and 75%.
Yeah, the Wayback Machine. I mean, year to date, we saw Intel gaining 24%. So you're absolutely right.
Nobody liked it. Had the technical setup, and like I said, it's not what I trade, it's how I trade it, and it had that bullish divergence, and it had that that setup on that bottom with limited risk, and you put yourself in position for that stock to make a pop.
All right, Alan Nuckman, good to see you. BullseyeOption.com and our own Rick Ducat on those charts. Thank you both very much for the big three today. Coming up next, we are going to